Okay. Hello, everyone. Thank you for joining us. Today, we're going to be discussing De Beers, which always garners a lot of interest both within and out of the industry. But more so now because it's at this current moment that Anglo American is in the process of divesting from its 85% stake in the company, and that makes it a whole lot more interesting. So the sale of De Beers by Anglo American begs the question: what the new owners will do with the company. What might the company look like in 20 to 30, 40 years' time, even? What is De Beers? Is another question. Is it a brand? Is it a mining company, a retailer? Or is it simply just an influential diamond company? So before I get to introduce today's guest, I want to tell you about I want to tell you about another important company in the diamond landscape. Diamond Debates is supported by Sarine Technologies. For over 35 years, Sarine has asked the industry's big questions, providing advanced AI technology to drive the diamond sector forward. Imagining a more efficient and more innovative industry is central to Sarine's DNA and essential to long-term growth across the entire diamond ecosystem. So there's a lot to unpack in today's topic, and who better to argue a case for or against the long-term future of De Beers than Paul Zimnitsky. Paul is a leading diamond industry analyst specializing in the global diamond demand, supply, fundamentals. He's widely cited. Paul is the author of countless research and analysis. He publishes a widely read State of the Diamond Market monthly report and host of the Paul Zimnitsky Diamond Analytics podcast. So thank you for joining us, Paul. It's great to see you again. Welcome.
Yeah, thanks, Avi. And I was thinking, I think the last time I saw you, I think it was probably 3-4 years ago, but we were in Kimberley, South Africa, and we were at this dinner party at the Kimberley Club. And this fits into today's topic perfectly because this was a hotel that was built in the 1880s by Cecil Rhodes. And he built it so he had a place to stay when he visited the mines in Kimberley. And it was the actual location of where he bought the final block of mining claims that secured the monopoly. And that deal, there's like a plaque on the wall. It took place in the billiards room.
Yeah, it's you can feel the history in that building.
There
It was quite
has to be ghosts in that hotel.
right. Ghosts of
But
diamonds past, right?
yeah, but we were at this party, and the owner of Akapa Diamonds, they own the Kimberley tailings mine now, and he was on stage presenting this yellow diamond that he just recovered, and he's like one of those larger than life characters, and he speaks in this very theatrical way, and he's presenting this diamond, and in the background there's a woman on a grand piano playing diamonds are forever, and it was like just one of those times where you feel like you're straight out of a movie, like like a James Bond scene.
It was quite surreal. I'd say that, and like I said, you could feel the history of the company and of Kimberley, which is so intrinsically connected to De Beers, although not today. But it's where it all started. And if you look at that timeline to where we are, over 100 and something years of De Beers, it's come on quite a journey, maybe it's the same type of company as it was back in those Kimberley days. Maybe that can be argued, but maybe the first first starting point in our little debate would be, how do we define De Beers? What is it today? How do you describe the company when people ask you?
Well, I mean, I think it's still clearly the steward of the industry. I think it's unquestionable. There's not a whole lot of industries that are, it's essentially it's an oligopoly. And then I think with the sanctions on Russia and Alrosa, it's become even more pertinent, its role in the larger industry. And I think when you look at where we are today, I think the lack of clarity around De Beers' future is actually it's a problem for the larger industry. I think you just look like investors don't like uncertainty. And I think, just on a different industry, but if we look at, software stocks right now, I mean, these major software companies that just generate a ton of cash flow and they continue to grow, even, as they've grown to these huge sizes. No one really knows what the impact of AI is going to be on them, and they're getting crushed. Like some of these, big companies are down, 30, 40, 50, 60% in the last like 2-3 weeks because people came to the realization that, we just don't know what the future is going to be. And it's not going to happen tomorrow or maybe even next year. But when you value a company or an industry, you're looking, longer term. You need a terminal value. What's it going to look like 10 years out, 15 years out? And, so with software stocks right now, we just don't know what that future is going to be. And it creates, major investor hesitancy. And I think we're seeing that with the diamond industry right now, where players in the supply chain are maybe hesitant to make big capital investments because, we aren't exactly sure what De Beers is going to look like 6 months, 1 year from now. Will it be, in stable footing with an owner that's willing to invest the capital to kind of maintain, the demand for natural diamonds, and until there's some clarity around that, I think, the industry is going to, again, continue to be hesitant with investments. And I think that's, that kind of, I think makes it clear how important, the company is. I mean, it's definitely the most important company in the industry. There's no doubt about that.
Yeah, there's no doubt about it. But then, like, what is it? Is it a mining company or is it a brand? That's what I struggle with when I think about if I had to buy De Beers and then consider what the company will be in 20, 30 years time. That for me is the fundamental question. How do I look at it today? Is the majority of my revenue is coming from the mining rough sales side of the business, but the name recognition is so strong, and I'm not overly confident in the future of rough of the rough business. Maybe I'm just throwing it out there. So how do you define it? Is it a luxury brand? Is it a miner, or is it both?
Yeah. So I was just going to say, when people in the that are mining investors ask me about the industry, it's the one thing that there's a lack of understanding around is that diamonds are a product where you have to mine them, you have to supply them, and then you also have to create the demand. If you're a copper producer, which is where De Beers parent Anglo is moving more towards, you don't need to drive demand for copper. It's going to be a Chinese infrastructure project, or the new Green Deal in the U.S. It's going to be the AI cloud build out. You need copper for all these for all these build outs. But with diamonds, it's like you have to supply the product and you have to create the demand, and that's what makes it so unique. And I think that's why De Beers' vertical structure is so integral to what it is. And I don't see how that's going to change, because because even when you look at like the rest of the supply chain, it's like the midstream doesn't really promote the product. The downstream promotes it. I mean, LVMH, Richemont, Cartier, Tiffany, its subsidiaries, they spend a tremendous amount of marketing, but they're marketing the brand first and foremost, not necessarily natural diamond. So I think I don't think that's changed, and I think that's where the industry really needs to kind of figure out the path ahead. And I think that's why there's all these ideas around the Luanda Accord and the NDC, and how do we kind of jointly share this marketing burden, because I think everybody at this point understands that marketing is such a pertinent part of this. And I think with De Beers, for them to focus on building a brand, or building the De Beers London jeweler entity, I mean, I think I understand why there is desire to do that, but it's at a time where there's just limited resources, it seems like maybe that wouldn't be a top priority. I think for me, if I was running the business, I mean, I think building a luxury brand takes a very, very long time. It requires a lot of money. And at the end of the day, I think people know what De Beers is and that the brand has some value, but it's not in my mind, comparable to, Cartier or Tiffany or Van Cleef. I mean, I think
Right.
to get to that point, you have to, just, spend tons of money year over year over year. And then you get to the point where you really kind of have that high end luxury brand
Yeah,
legacy.
and it's not a new retail operation either. It's struggled to gain momentum over the last, when did it launch? It was early 2000s, I think. Was
And it was
the
partnered with LVMH. I mean,
Yeah,
arguably the
yeah.
best luxury player in the world. And even that didn't really,
Well,
move the needle in any
well,
big way.
well, that could arguably have held it back because their argument is that they didn't have full ownership of their name, and so now that it does, it gives them some leeway to build the brand in the luxury space. That's on the one hand. On the other, the rough market has been completely disrupted in the last 2 to 3 years, and we're not seeing the same sort of broad volume-based demand as we used to. So, how do you then position a volume producer like De Beers um, to for growth based on its rough business?
Yeah, I mean, I think, well, I think it's just more, critical to the larger industry. And again, this kind of shows the importance of De Beers as the industry steward. But I mean, I think we're at the point where the natural diamond industry really needs a profound rebranding. Like you said, at the lower mid price points, it's becoming all about price. And the industry needs to give consumers a reason to pay up for, say, a smaller natural diamond, when the other option is a top quality, very large lab grown diamond. And I think diamond as a larger product is having an identity crisis. And I think, they could get even worse as lab grown prices get even lower, given that there's been so much conflation between natural and lab grown. So I think my concern, has been that, the perception of diamond as one of the most valuable things that you could own. When pop stars sing about diamonds and songs, and when diamonds are featured in the movies, I mean, these aren't lab-grown diamonds, right? I mean, it's because people think of diamond as one of the highest-end luxury, products you could own. But my concern is that with the inflation of natural and lab-grown, the perception of diamond as this highly, highly desirable, valuable thing, could erode. And I think some of that's definitely happening. And I think that's the big risk for the industry. And I think, again, that's where you need kind of the key player to kind of really stand up, and I think kind of lead. What needs to be, in my mind, is an actual rebranding of the natural diamond product. And I think that could set the industry up for kind of the next stage of growth.
Yeah, I mean, it's certainly that disruption has certainly happened. I guess to your analogy, lab grown is the AI of the diamond industry. That
Right.
has eaten into the traditional business models that it's based on. I'm not sure if part of that the rebranding of the industry and of the product is one thing, but there's also a sort of structural issue within the industry and how it operates. And I think De Beers is caught in that challenge that the old business models aren't going to work in the future. And to my mind, that older or the traditional business model of the diamond industry is the volume play, that you could produce all those diamonds and there was a market for them. And today the industry is more segmented towards the higher value play. And so, when you're a producer like De Beers that's recovering 20 million, 25 million carats a year, but is stuck on revenue of around $3 billion. I'm not sure where how do you stimulate growth for the company? Forget about the industry for a second. Let's think about us as new owners of De Beers. How do I ensure longevity in terms of revenue and profit growth from this current starting point.
I think the only way is to drive the price of natural diamonds higher, and the only way to do that is again to I think reignite the identity of it. I mean, I think there's been a few ways. I've kind of spoken up about this, but I think even if there was some sort of physical branding mark on a natural diamond, where each one has like a red dot on the table or something like that. Like, I think you need something new and something that differentiates it from lab grown. And obviously De Beers tried to do that this holiday season with the desert diamond, I think, which was a good concept. But even with that, you saw lab grown companies just kind of recreate brown and yellow and champagne lab grown diamonds, right? So I think it needs like a more profound rebranding plan. And I think the underpinnings of natural diamond are still there. I mean, you're just never going to be able to compete with a product that's literally 1 billion years old, brought to the surface of the earth with a volcano. I mean, these are like just really cool, fundamental underpinnings. You have, again, such a long history of people valuing, natural gemstones and precious metals. That's not going to go away, but I think you do need to kind of remind consumers of this in an era where, the natural diamond industry just really, dropped its guard. And again, I kind of look at, say marketing as a proxy for that. And I, done some work trying to analyze this. And in the De Beers heyday, I think it was probably spending $400 to $500 million a year in inflation adjusted dollars on category marketing. And I think today it's, well under 100. So I think there is a direct correlation there. And again, I think the natural diamond product could absolutely have a very bright future ahead, but you have to spend the money and you have to execute on marketing. And it's very difficult to do that when the industry is kind of down on its back. And that's, again, why I think if we get a buyer that's backing De Beers that really has the money to spend and really believes in the future, it could really be the fundamental catalyst that really shifts the trajectory of the industry. And that's why I'm hoping, that someone with deep pockets that believes in the future, steps up as the buyer. And that's something that would make me very enthusiastic about the future.
Yeah, I mean, I'm tempted to get you to speculate on who you think the buyer will be, but I'm I'm not gonna do that. I mean, obviously there's the Botswana factor that comes into it. I think we kind of differ on the point of whether the industry can regain its lost market share from lab grown. I feel that there's been a disruption, and that that both segments are being pushed in certain directions, and that's just the new reality, which means that there are fewer diamonds that are going to be required, with fewer new diamonds that are going to be required within the ecosystem, and therefore I'm not sure, when I think about De Beers long term, if it's going to be as much reliant on its mining business. And that's why I think there is some value in investing in that retail side of the business.
The problem I have with the retail side is it's basically promoting the high-end category of natural diamonds, and that's the one segment of the industry that doesn't have a problem right now. The consumers that could afford those high-end large stones, they're still buying them. They still want natural. So it's kind of seems somewhat.
But it's a business. I'm not posing the question to you regarding De Beers as industry steward. You're supporting my point that that's where the business is. That's where the growth is in the high end value luxury market. So why not invest in that as a business from the retail side.
The reason is because the volume and just because the volume's so small, the value of those goods represents a small part of the market. Where if you're in the diamond mining business, the big money is in the smalls and the medium sizes, and that's why when you saw the industry, it was probably, I wasn't covering it, but in the 80s and the 90s when they really transitioned and started selling, say, lower quality natural and smaller sizes. That really helped the economics of the mining business. Now, again, could you get back to that point with lab grown? It's going to be extremely, extremely difficult. But I think the industry's lost so much of that low to mid end segment that if it kind of can claw back any of it, I think you're going to really feel it. I think there's a lot of sensitivity there, and that's why, again, I think. Like for instance, I think what the industry needs to do is it needs to go to the downstream and say every single time you present a natural diamond to a consumer, say this is a diamond from whatever country it came from. This is a diamond from Botswana. This is a diamond from Canada. Because we're at the point, again, where there's been so much conflation, where downstream, where the industry is directly meeting with the consumer, they're just being told you can buy this, low quality 1 carat natural. You can buy this 4 carat top quality lab grown. I mean, it's just that natural doesn't have a chance, right? I mean, so it's going to take a real rebranding. And I think if you do that right, I think the consumer is going to want natural and they'd be willing to pay a premium for it. And I think there's still this huge opportunity to really kind of engage the story about, if you buy this diamond, you're helping this African country of Botswana and its people directly. And that whole human side of the business and the marketing around that is, I think it's potentially huge if it's executed right. And I think you have to remember, diamond, it's a emotional purchase. And I think you could really, really kind of narrow in on that, that side of the story. And I think it would really, really appeal to the consumer ethos. And again, it takes money and it takes execution to do that. But I think if you're asking me from the standpoint of how do you kind of reinvigorate the business of De Beers, I think it keeps coming back to that, because they have, they still have enormous diamond resources in the ground. I mean, they have so much supply that if they could really drive demand for the categories of diamond that have been underperforming, you're going to really, really notice it on the cash flow side of the business. So. Yeah. Again, I don't think there's anything that's super brand new about what I'm saying, but I think it's just a reiteration that I think this is kind of the only way forward. I don't think, just my understanding, as an analyst covering the mining industry, the diamond mining business just does not look that good if you cut out all the small and the mid grade mix. The mix is too skewed toward those smaller mid-sized goods. I mean, you need those higher you need those higher end goods, but I would argue you need the smaller and mid goods to have demand in those categories as well to really make the mine economics work. And that's why you look at the diamond mines that have a disproportionate amount of really high end stones like Letseng and Karowe, and that they're still kind of find themselves in a somewhat challenged situation as well, and they are predominantly producing from a value standpoint those higher end goods, but they need those smaller and mid end goods to have a bid in the market as well. So you really need a broader demand for the product. The economics just don't work as well if you're only selling those higher end goods. Yeah, and I think we're seeing that reflected.
Yeah, I mean the unfortunate position of the miners is that they can't pick and choose what they pull out of the ground. I would agree with you that it very much depends on those retail jewelers. And I think one, from an optimistic point of view, my understanding is that the retailers themselves, jewelers, miss selling that category of that middle to lower end natural diamond, those half carat to a carat, that were their bread and butter, and so maybe you'll see some return of that from the retail side of things. I'm not convinced that provenance is the answer in terms of messaging. I think the industry may be overplaying it a little bit. I think that we should lean into design and sex appeal and edge, and rather than the provenance story. It's important, of course, and it's a great story for the industry. But I'm not convinced that the consumer. I'm not convinced it's the selling point for the consumer. It's a nice add-on,
Playing into the theme of your show, which is a debate show, I'll say I strongly disagree with that. I mean, if it's about design, you could use any stone and create a nice design. I think that's the whole point. I think you look at some of these companies that produce lower price point jewelry that's under $100. Taylor Swift wears some of it because she likes the design, and they're using CZs, right? So with the design, you could use any stone, you could use any material. If the design is there and the consumer wants it, they're going to buy it for the design.
Right.
And I think that's the issue right now. I mean, you produce a nice piece of jewelry with diamond, you could use lab grown or you could use natural. And a lot of these companies are even offering the consumer, you could build this piece with lab grown or natural, right? So in that situation, natural doesn't really have a chance because it's so much more expensive,
fair point,
and the consumer.
Fair point, and maybe from a design point of view, there's also the quality of the product and the craftsmanship where the manufacturing side of the diamond and the quality of the diamond also plays into it, and then there's the actual value of the diamond, that I think I think the industry has a scarcity problem because we play up that rarity card, but there's always an oversupply of goods coming into the market, and maybe that's something to think about as well. Is how do we?
Well, I mean, there wasn't an oversupply
in
2021 and 2020, early 2022. There wasn't an oversupply. There was an undersupply, and again, I think that just when the demand is there, the supply side's not an issue. I continue to believe we have a demand issue, not a supply issue.
I have this argument with many people. I'm not convinced of that. I'd argue that even in those strong years of 2021 and 22, part of the reason we've had such a difficult time in 23, 24, and 25 is that there was an overhang of supply that was bought during those sort of
because demand dropped off a cliff.
Right. Well, and there was an overreach in buying. The industry has a habit of overbuying when the market is on the up, and so it does lack a bit of rationality, and that inventory that was in the midstream at that time maybe didn't reflect the true state of demand, but yeah, I mean, it'll be interesting. I think the other factor is we've got to consider that many of these mega mines are aging and won't be producing the same volumes as they currently are in 20, 30 years time, which will also shift the supply demand dynamic and also require a rethink of business models for companies like De Beers, And I wonder if the new owners or prospective buyers are thinking in those terms, or is it a 5-year plan that they're looking at?
Well, that's we don't want a short-term buyer that's going to be like a vulture fund that's just going to try to buy it on the cheap and then bleed it dry. And I'm
an angler. We don't want another angler.
Well, I don't know. I don't necessarily feel that way about Anglo's ownership of De Beers. I mean, but just getting back to the inventory thing, I think the one thing if we look at the tariff development, that it looks like there's going to be an exemption on natural diamonds coming from India to the U.S. And I think one of the issues we've had in the last couple of years is that, well, I would say definitely in 2025, was that retailers are understocked natural inventory because they were hesitant to buy inventory because of the expensive tariff. And I think, lab grown inventory is so cheap. There's a problem, I think, downstream where the retailers just have so much more lab grown than natural inventory. And if you don't have the inventory, it's hard to sell it. So I think that's kind of something else that's kind of happening that people aren't really acknowledging. I think we have to get natural diamond inventory in the retailers' cases so they could sell it. And I think that's been a problem in the last little while, that hopefully will be somewhat helped by the development with the tariffs. But you need the inventory, or you can't. If you don't have it, you're not going to be selling it. And right now, everybody has a ton of lab grown inventory, and I think there's actually shortages of natural inventory, so they're selling the lab grown inventory, and I think that's kind of making the problem worse.
Interesting. The inventory mix at retail and how that's affecting their selling their sales pitch. They're selling what they have in stock, which is kind of interesting. So I mean, I hope you're right. I think I was thinking about it as well as the tariff story unfolded in the last few days or the last week. Whether we'll see at least a short term spurt of demand coming through, and I think we might. I think we might do that. Paul, it's been a pleasure as always. Thank you so much. I could go on for an hour or two with you on this subject. But I think you've given. I think we've brought some interesting insights, which gives people something to think about at least. So thank you for your participation.
Yeah, thanks. It's I always enjoy talking, and hopefully we'll see each other in person soon. And if I could just promote one thing, so Signature Jewelers has a new podcast out. It's the project of the Chief Communication Officer, Colleen Rooney. The first episode actually comes out today. I'm the first guest, so I want you to check that out.
Awesome.
It's called Beyond the Vault. It's really nicely produced, and I have a podcast of my own. It's called the Paul Zimnisky Diamond Analytics Podcast. It's on my website. It's on Spotify. It's on Apple, the major podcast platforms. So check those out. And thanks again, Avi. This was fun.
Absolutely, and I encourage everyone to check out your podcast. It's always got great insights. So you should check that out. And till next time, everyone, thank you for tuning in. We'll see you on the next Diamond Debate. Thank you.